Hello guys. Today I make or I have made this this live at 10 o'clock. Understand that I will change it to 10 for these 4 Saturdays, and because some people on Sunday they told me Sunday is too late and Monday we work, so could you please change it to Saturday? So I will just change it to Saturday. Okay. As you might know, this subject of ETFs and stocks trading is a big subject. Okay, as you understand, it's a very big subject, and I have always talked too many times, but still I'm getting questions, and some people, they say to me, the market is always in trouble, sometimes going down, sometimes it's going up. What if we just trade ETFs or we invest in ETFs and we don't do nothing, just we buy and leave? Okay? This is, I see how lazy some people are. It means they think making money is just buy and hold and go sleep, and that's it. And the money becomes coming to you every day and you will never lose, and that's it. What is it called? Trading or investing. Now, the truth is, this is totally different. Rahmatullah, assalamu alaikum. How are you, Rahmatullah? So, as you might know, in this session, live session, I will be explaining nearly in 1 hour. I will explaining everything, and as usual, after 1 hour, the second hour, we will see questions, and I will answer all your questions. And I have done something else. This live, since it is big, since it is long, it is 2 hours. Last week, someone gave me a suggestion. He told me, why you divide this into small videos? At least when someone gets one, he watch it, and then he watches second, third, and fourth. It's better than. Or someone he gave me a suggestion. He told me, why not do live for 15 minutes, and that's it, and then you can do it more often in the week, like 2 times, 3 times, or 4 times. Okay. Hey, dog lips. So, you understand. If I come on live each night, okay, with a small subject, there are a lot of people who want to ask questions. And for me, I don't want that someone asks me a question in a live and I ignore him or ignore her. So it's a matter of what we call customer service or something like that. It means it is a social thing. When I'm doing something live, I see your questions, I see what you said, and then after I finish what I'm saying, or my subject, to develop the subject, to explain, and I can answer all your questions, guys, because I'm here for you guys. Okay, I'm just here for you, for people who are following me or watching my videos. Okay, now, so maybe in the future, I don't know, to have more lives, but until now I'm doing only 1 live. But I can do more videos when there is something going on in the market. I have done before sometimes 1 video, 2 videos about the news or about something that it is occurring in the market, which I should signal to you guys. But understand that the guys who are with me in the subscriptions, they see my trading account, the stocks that I buy, the stocks that I sold, why and how. We see options, we see investing lessons, we try to see things. So I'm always explaining there more than here, because you understand, people, they pay me to give them the premium of information. Okay. NASA said hello everyone. Pablo, hey Pablo, how are you? So, top series, thank you very much for... yes. So I see here, they begin to write. Someone is say to me 15 minutes about the news. And okay. Rocco, thank you guys for your statements. So I will deal with all what you say when we finish the 1 hour, because right now I will go and explain the subject. And you understand that I am not for news. Okay? Understand that. For me, I'm training people to follow trends. This is the most important thing. Not news. Because the news, when you hear the news, it's over. For example, you are at 5 o'clock and there is earning news after the market close. Okay? Now, in seconds, I'm not saying minutes, in seconds, you will see a gap up or gap down in some stocks. It's over. The stock was $50 and then you see it $75. It's over in seconds. So if you are following the news, it's too late. It's too late. You should be a day trader to follow the news. And understand, guys, that I am not doing day trading. I am not following news. Sometimes when the news is very big and I want just to explain some stuff, it's okay. But for you guys, you don't get any benefit from news because the news has already been in the price. If I say to you, there is a gap up in this stock. There is a gap up. So what's the thing for you? If you have been there, yes, it's good for you because you get a gap up and you make money. But for those who are not there, if Facebook has a gap up or gap down, what is it for me? Did I buy Facebook or Apple or any other stock? If I bought it, it has a gap up, it's good. So, but understand that we have in our trading account, we have 4 gap ups of the news, but I told them before about them. And this is according to my strategy about coronavirus. And most of you have bought my ebook. Those who don't bought my ebooks, you can go to a silver subscription or golden subscription. You see the stocks that we are holding. And we have 4 gap ups, and we will have more gap ups in the future. This is a strategy, a speculation. But it is not my strategy of following the trends, which is a swing trading. Swing trading is you follow the trend. There is a trend. There is a few weeks, 1 month, 2 months, 3 months. Do you understand? So here today, I'm speaking about trading, swing trading. I'm not speaking about news, okay? Hello, Ora Pronobis. Thank you very much for coming. I haven't seen you for ages. You shouldn't be lazy, Ora Pronobis. You should come each time I'm here. Roku 2019, thank you for your statement. I will answer your question later. Top Series, thank you for your statement. Pablo, thank you for your statement. Nasa, thank you. Doglips, thank you. Rahmatullah, thank you. Thank you all of you guys. I will deal with your statement and with your questions when I finish. Now let's begin. Now first, we try to see what's the difference when we trade ETFs or stocks. What's the difference? Or what is the similarities? What is the differences? Why should I trade ETFs and why should I trade stocks? What's the difference? Okay, let's begin from the beginning. A stock represents a company. Let's say, for example, Facebook, the stock Facebook, it represents a company called Facebook. And most of you guys, you have, most of you I know, you have a Facebook page, Facebook profile, and you are always doing some stuff. Okay? Now, FB is the symbol. You go to a broker, You fund your broker with some money account. You fund your account. You are interested to buy Facebook. You buy some shares of Facebook, Twitter, or Uber or Amazon or whatever you want. The whole market is full of stocks. So these are companies. Okay, there are big companies. The biggest one, you find them in Dow Jones. They are 30. Now, why they put them there? Because they are the biggest in capitalization. It means these companies, they are so big. They have a lot of money. They have a lot of stores, a lot of infrastructure. Okay, these stocks, they make more money than some African countries. Do you understand that? If you take Walmart, for example, if you take Apple, it makes more than 10 or 15 countries in Africa. Do you understand? It means they are big companies. Now, and those big companies, let's say 30 big companies, how do you know they are big? You should just multiply shares outstanding, it means how many shares the company has, and you multiply it by the price. You will see how big is the company. The 30 ones in Dow Jones are the biggest one in America. And then we have, later we have the other index, which is S&P 500. We have 500 big companies also. They are less than Dow Jones companies. Okay, they are big. And then you find Russell 2000, then you find NASDAQ, you find a lot of stuff. So, all these are companies. So, understand that stocks are not the same. Because when the people, they trade stocks, they think stocks are the same, okay? As you buy Apple, the same as when you buy Ford company, let's say for the car producer like Ford, or Chevrolet, or another company, or a bank, like Bank of America. You think they are the same, but they are not. They are not. And when you begin to trade, you will begin to see the differences. Okay? You will begin to see the differences. Some companies, they give dividend, some they don't give dividend. For example, Facebook, since it is like a new company, like it got to the into the stock market in 2012, in the stock market. But Facebook, it was built or set up before 2012. But when it comes to the market, it becomes big. It is in 2012 when it enters and get listed into the exchange. Okay, so understand that Facebook doesn't give a dividend. Why? Because they need every money to make the company bigger and bigger and bigger. As Trump said, to make America great. Yes. Okay. Now, so, and there are companies that are very slow. Not in general. In general, they are slow. Like banks, like what is it called, the other one? Banks, insurance, utilities. There are a lot of stocks that doesn't move that much. Okay, doesn't move. It means, why? Because the traders, they are not interested in them. They are not fast. So day traders, swing traders, mostly, like us, we like companies that trend. Now, what does it mean to trend? It means in few weeks, a few months, I should see some money. It means if I buy a stock, I should see 20, 30, 50% in these 2 months or 3. I don't buy a stock and waited for 5 years and then I get 10%. Or I got minus 10% and I see some stupid people, analysts, they say it's the best company in the world. No, man, no. What is good for me, sometimes it is not good for you or for someone else. Okay? So understand that. Understand that stocks are not the same. So when you begin trading, and you begin to have experience, 1 year, 2 years, 3 years, 4 years, you begin to see the difference a lot. You begin to see that when you buy a stock, 2 months, and then you get 10%. So even though the trade is a success, okay, and this is why you see some people online, like the teachers or scammers or whatever they call them. They say to you, "Oh, I have 80% success." Okay, and only 20%, which is what we call failure. Okay, so I am good. This is a nonsense, because even you have 80% success in trades, it doesn't mean that you are making money. Sometimes 80% and you are a loser, because people, they don't understand how money comes from stocks. So I am here, okay, to explain to you these things that online no one will explain to them. Okay, no one will explain to you this, because it's against what they are doing. So, as I told you, stocks are not the same. Now, I say some stocks are running fast, and this is what I like to trade. If you go to my trading account, whenever I buy a stock, it should have some potential to go good. Okay? To go good in few days, few weeks, I should see some money. If I don't see money, and if the stock is lagging, it's slow, it make me nervous. Okay? It goes on my nerve. as people, they say, I become mad. I don't like this kind of stocks, because I see them in my life of trading. I have seen them a lot before, but I don't know why they don't go. But when I understood why they don't go, I delete them from my radar. It means when I do a search, I only search for stocks that I can make money faster. And this, in the market, I call them the leaders. The leaders, it means a stock that leads the industry. And this I explain in training level 3. Training level 3, how to search for stocks using an industry index. It means when you see the indexes, and you go to them, you will see which is fast, which is slow. And then, when you see one, what is it called? When you see one index that it is fast, you should go to it, see the stocks, and see the leaders, which are the best stocks in the industry. Okay? This is how I choose my stocks. I don't just go to any stock and then I see it's good in the chart and then I buy it and that's it. No, this will never, it will never make you the money that you deserve. So when you train yourself to pick only the good stocks, and then your performance will be better, your money will be better. If a stock, you mistake in one stock and doesn't work, you deleted it, you exit it. Because we don't keep losers. Understand that, because sometimes you see you have done a lot of good trades, but at the end of the year, you don't find that you have made a lot of money. You made 5% or 10% or 15%, and you say, I have made other good stocks or good trades. Where is my money? Your money is lost, either because you choose slower stocks. The second thing is you do the same mistake. You hold losers and you say to yourself, oh no, I will not exit, because if I exit, I lose the money for true. Why not I stay more? This is the biggest mistake that you do in your trading. And I'm not speaking about investing, because investing, it is another thing. Because you should bear the loss until you see that the company, you realize that the company is not doing progress. This is in investing. But for me, right now, I'm just talking about trading. I'm not talking about investing. Investing is another thing. Okay? Now, so as I told you, stocks, you should search for the leaders in their industry. The stocks, when you compare them with Dow Jones or S&P 500, because listen, Dow Jones, S&P 500, Russell 2000, mostly they are the same. When you see them, I will just show you. Let me put the chart just to show you that it's not a big deal. They are always the same. So let's go to the chart. So as you can see, we take this. We don't need them. Okay? So look at the Dow Jones. Spider Dow Jones Industrial Average ETF. Now you see it goes down, it goes up a little bit. It's okay. But when you see, for example, S&P 500, you see Spider's S&P 500 Trust Series ETF. So you see it's the same. It's not a big deal. It means they have been all in a downtrend. Now it's in some uptrend. Now you take the Russell 2000. It's the same, nearly the same thing. It means it's not a big deal as these ETFs. Okay. So as you can see, I will just show it to you many times. It's just to see that they are the same. Not a big deal. Not a big deal. Some little differences, just little, but it's not a big deal. Yes, gold is doing good and silver is doing worse than gold. No problem. So let's go back. So as I told you, you see that stocks are the one that we are searching for are the fast stocks, and these stocks are called leaders. It means they do better than Dow Jones, S&P 500, and Russell 2000. Okay, they are doing just better. Doing better, it means they are, when they are trending, they do better in percentage. For example, Dow Jones, let's say Dow Jones is going up. Let's say it does 10%. Just an example, okay? You will find the leader is doing 35%, 40%, 50%. Now, what does it mean? It means if you bought that stock, you will be making more money than the ETF or the index. You see the picture? But a lot of people, when they trade, they in general, they don't know. They don't know which is which. They just either search online and go to Facebook groups or chat rooms, or they go to websites. They tell them which stock to buy, which not stock to buy. They go to analysts and they begin to speak about fundamentals, and this stock will be and will be and will be. So you get overwhelmed with all this information, but at the end, you take a decision to buy a stock, but after 6 months, you will be not making any money. Maybe worse than an ETF. Okay, which is bad. So here I'm just trying to continue with the stocks, and then when we finish with the stocks, we will go to ETFs. Now, there is another thing. Stocks in general, we have smaller companies, which are called, you know them all, penny stocks. Penny stocks, they are stocks under $5. Some people, they say under $2. It's always the same. 5, 2, 3 is always the same. Now, these stocks, they move with a high percentage. And they go down with a high percentage. So there is a big risk and big profit. So if you go to them, and this is what a lot of people, they like. But they want to make a lot of money, but they don't like the high risk. Okay, and this is the opposite side, the opposite thing they do always. It means if you want to have to do high percentage, you must go to stocks that are high risk. Okay, but there are other ways you can minimize this risk and don't be exposed to high risk. Now, but when we say penny stock, there are some stocks that they do the same as penny stocks, but they are bigger. You find $10, $15, $20, $30, $50. Even you find a stock that it is 200 and it is like a penny stock. I give you an example. Tesla, for example. Tesla, in few months, it goes from 200, it goes to 700. In few months. This is like a penny stock. When a penny stock is $1, it goes to $3. It means 300%. It's the same. Although Tesla is a big stock. Now, what makes this stock move fast? It's the traders. Swing traders like us. All the people, when they see something moving good, they jump and they buy it. Okay? Yes, there is a risk, but there is big money. Where do you see you can make 300% in few months? And someone told me, oh, can someone make 100% each month or 2 or 3 or 1 year? You say, yes, you can. But you should be doing risky trades. You can lose also a lot of money. And this is trading. Okay? So don't expect to make a lot of money and you have no risk or less risk, because there is no risk. It doesn't exist in the stock market. No risk, it doesn't exist in the stock market. Okay? Except when you are trading for others and you say to them, I play with your money, but don't go after me. Okay? I play. If you make money, you give me money. If you lose, it is you that you lose. That's it. So in this case, yes, it means you play the game and you don't have any risk for yourself, but the risk is for other people. Okay? So this is what we call stocks. And there are some stocks who have dividend, some stocks who don't have dividend. This is well known. Most of the stocks that have dividend are the stocks that are old, and they are stabilized companies, big companies. They give dividend. Okay? New companies, most of them, they don't give any dividend because they need. Okay, they need their money. They don't need to cut dividend from the price of the stock. But the big stocks, if it takes $1 from, let's say the stock is $100, if they take $1, it's not a big deal. Okay? So, and it is a stabilized company, it's a big company, and the investors, they like dividend stocks, so they need to stay in bigger stocks that they give dividend. Okay? And it's a big wealth for them, for big, rich investors. Now, let's go now to the ETFs. Now, ETFs, they are like stocks. You can buy them, you can sell short them. There is options about them. It means you can do whatever you want with an ETF. And some people, they don't even differentiate when they trade. They don't know if it is an ETF or stock, and this is a big danger. I'm telling you guys. Hello, Fabian, and the other guys. So I will answer your questions when I finish my subject. So I have spoken about stocks. Now I'm speaking about ETFs. So please just write your questions, whatever you have right now, and then when we finish, I will speak. I will answer your questions. Now, ETFs, they are like stocks. Now you ask yourself, if an ETF, it is not a company, it means it doesn't represent a company. So what is this ETF? ETF stands for an exchange traded fund. An ETF, it is just a stock that tracks an index. Index, it could be any index. Okay? If you go to my chart that I am using, and most of you guys use, if you want to see ETFs, you will find hundreds and hundreds, and each year they make more ETFs. Okay? It tracks something. So I give you just an idea. The ones that I always use, I use 5 ETFs to show always. So guys, you know them all. I will just show it to you as always. Okay? So, for example, you have gold. Gold, it is an ETF. GLD. It shows you that this GLD, it is an ETF that tracks gold. Okay? What the gold is doing, it tracks gold. Okay? Now, if you take silver, SLV, okay, it is an ETF that tracks silver as a physical silver. It tracks what it does in real. Dow Jones, Dow Jones Industrial Average ETF, it is the average of 30 stocks of the index, which is Dow Jones. Now, this is the ETF. Now, if you want to go to the Dow Jones, this is the Dow Jones, DJ30 here. Yes, it is $23,775.27. So, in general, Dow Jones Index, which is here called DJ30, you can't buy this index. So, since you can't buy it, and you want to buy Dow Jones, it means the average of 30 stocks. So, you do what? You go to DIA and you buy it. Okay? We have IWM, which is iShare Russell 2000 ETF, and you have SPY, which is S&P 500. So each one tracks an index. Now, as I told you guys, let's go to see ETFs. Now, ETFs, they are like stocks. You buy them, you sell them short, you can follow a trend, you can invest in them. The only thing I'm telling you, the only big difference between a stock and ETF is that an ETF, you pay a fee. Now, this fee is inside the ETF. Okay? Inside the ETF. For example, let's say you want to make Dow Jones by yourself. You take the 30 stocks. So I will just try to explain this. Maybe some of you are interested about this idea. Okay? Maybe you are interested about this idea. So here is the Dow Jones, DIA, which is Dow Jones. Now we have 30 stocks. 30 stocks. Now, in order to make your account, let's say you want to make your account, your broker account, you want it to make it as an index. Let's say you have $10,000 and you want to buy all the stocks. So, for example, we have 30 stocks. You want to divide on $10,000. So let's say you have $333, or let's say just like this, and you multiply by 30, just in general, to get this $10,000. So, and then in your account, you have all the 30 stocks here, 30 stocks that you bought. If a stock is big, you buy, for example, 1 share. If it is small, you buy, for example, 200 shares or 300 shares. It depends on the stocks that you want to buy. Depends on the 30 stocks of Dow Jones. Okay? You should give $333 for each stock, and you just make it look good. This is because you don't want to buy a stock, a lot of shares, and you leave the others with few shares. And if you want to go to check what are these 30 stocks, so this I give you just an idea. Let's go to the chart again. So you go to component here, and then you see this Dow Jones 30 industrial component stocks, 30 stocks. You click that, and here you will find the 30 stocks. For example, this stock 291. Unfortunately, you can buy only 1 share. If it is 333, you buy only 1 share because you can't buy more. If you buy 2, it could be $500. You don't have $500. Apple is 282. You can buy only 1. Home Depot is 212. Okay, 212. Still, you can buy only 1 share. You can't buy 1 share and a half, but you can buy 1 by share. And then if you go down, like this Dow is $33 for each share. So if you have 333, so here you buy 3 by 3, 3, 3, 3, 9, 10. You buy around 10 shares of the Dow. This Dow, I don't know what does it mean. This company, I have never seen it, but it looks like Dow Jones, but it's Dow. It's called the Dow. So you buy 10 shares. Okay, 10 shares of this Dow. You can, for example, Coca-Cola is $45. Okay, so let's say 2, 4, 6. You around 6 or 7 shares of Coca-Cola. It means until you finish you finish buying. Okay. So, as I told you, you can make your own Dow Jones without buying the ETF. Now, why you do that? I will give you the reason. You do that in order not to pay this fee, because this fee is taken from the price. Each year, this fee is taken from the price. It's not a big deal. It could be 0.50%. It means less than $1 less. It could be 0.50 cent or 0.75 cents per 100. So you think that this is not big, but understand, guys, through the years it adds up. Okay, let's say the market has gone, let's say it is $1 fee, okay, and let's say the stock market has done 10%, but you are going to do your performance is only 9%, because they took $1 from this 9. So you understand that this fee is like very, very important in the future, because you always take this from the index. Now it's not hello guys, so it says excellent connection. I don't know if you are listening. So are you listening? So please say yes or no. And do you see me? Because I restart and refresh the live. So if you are watching, please say yes. I see 3 guys. Oh, now it's working. So sorry guys, I just refresh. Maybe it's internet connection or disconnection or some problem like that. Okay, so let's continue with ETFs and stocks trading. So the main thing, thank you very much, Top Series and NASA, thank you very much. So the main thing you should put in mind that ETFs are like stocks, but ETFs you should always look what it tracks for. Sometimes an ETF tracks options. Sometimes it tracks cryptocurrency like Bitcoin. Sometimes it tracks futures. Sometimes it tracks currency pairs. Those that I am speaking about, or options, they are very, very dangerous. So when you trade, you should see what you are trading, because when you hold for long, for example, options, options, futures, currency pairs, Bitcoin, cryptocurrencies, all these are dangerous ETFs. Okay, they are dangerous. Some ETFs, they are leveraged. Leveraged, it means if the index is making $1, this ETF makes $2. It can make $3. It means it double the daily performance. For example, if the index makes $1, you find that this ETF makes $3. So what does it mean? It means it's making more money. But these ETFs can make worse. You lose $1 in index, but you lose $3. Because these are called leveraged. Okay? So be careful of these leveraged ETFs. and understand that there are hundreds and hundreds, and they are making more and more. Anything that you expect to be tracked, they track it. For example, just a few years ago, there is no Bitcoin. For example, let's say Bitcoin, it doesn't exist. I think it began in 2008. Now, before 2008, there is no ETF about cryptocurrency, right? But now there is, or there are many. So the main thing I'm telling you about ETFs is you should always see what it tracks and how it is the performance. Is it the same as the index or it is leveraged? Okay? And there are some ETFs to go long. You buy them to go long and to double or triple your money. And there are some ETFs that are called inverse. It means when the stock market is going down, you will be making money when the stock market is going down. This is all about ETFs and stocks. But the main thing is that you can invest with ETFs. You can swing trading with ETFs. You can day trade ETFs. So it's always good. Okay? So understand they are the same. It means let's say you buy Dow Jones. Okay? You buy Dow Jones forever. Each year you are there. You don't sell. You don't buy. So let's say I will give you just an example. To see the stuff from the chart. So let's go to see the chart. Now, as you can see here, Dow Jones. Now we change the day to year. Okay? Now, you see, I'm just taking all these lines. Maybe I have done before. You see how this chart is so excellent in making lines? Very, very quick you can do in it. Now you see Dow Jones yearly, year by year. Now let's say here, Dow Jones was 104. Now it is 237. It means it's so it doubled. But understand in how many years it doubled from 1.4 to 237. So how many years? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 years. If you put $10,000, you get $20,000 in after 11 or 12 years. But is this what you are looking for? Can you wait 12 years? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yes, 12 years. Are you going to stay 12 years to get your money doubled? For me, it's not a way to make money. Okay? It's not a way to make money. If you take any other stock, in a few days you can double your money, or in a few weeks or a few months. But this is 12 years. Now, why, in your opinion, so this is just a question to always ask. Ask always about performance. Performance is a very, very important thing. That's why I told you before from the beginning when I begin to explain stocks. I told you stocks, you can choose fastest stocks in the market. Stocks that go fast. Now, I will give you an example, okay? Tesla, for example. Just to give you an example, about Tesla. So here we speak about 12 years, okay, in the Dow Jones. So in 12 years, how much money you make if you bought Tesla? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 years. The stock was $26. Now it is $720. So you will be getting $290,000 from your 10,000. Do you see the difference that I'm speaking about? Are you going to buy an ETF after I've explained to you this? Do you see the difference? Okay? I think with this explanation, you will never think about, and they say to you, oh, stay safe. Okay, stay safe. Just buy an index and sleep, because it will do good for you. Now, ETFs and mutual funds, which is worse, you will be losing more money. You are not getting the market money, because some of your money has already gone to Wall Street guys. And I have always spoken about Wall Street guys. It is those who own ETFs, own mutual funds. Your money from 20,000, instead of making $290,000, okay, from 10,000 in 12 years, from Tesla, you put only 10,000 12 years ago. It means in the 2008, the crash of 2008, you see Tesla, you have $10,000, you throw it there. Now you have $290,000. It's the same. You have 10,000, you put it in Dow Jones, which is 30 stocks, and you find that now you have 20,000. So are you going to buy a stock, or are you going to buy an ETF? This, in terms of investing and in trading, it's the same thing. Okay? So this is just by numbers. This is just an example of how ETFs sometimes are not a good choice. But in general, Dow Jones is so big. But you can check some other ETFs that are faster than Dow Jones, and this you can find them in sectors. Sometimes some sectors are doing better than Dow Jones. You can make more money than in stocks. Okay, more money in other ETFs. And guys, I always showed it to you. Show to you how things work about these ETFs. Okay, so I think now I will just continue explaining one thing, that in general, if you are doing swing trading, you can follow ETFs like you follow stocks. Okay, so because ETFs, they do the same, sometimes the same on stocks in some ways, but some stocks are doing better. So in order to explain this, let me explain to you this thing. Okay, so let's take this from your way. So just to show you something. So let's say this is Dow Jones here. It stops. It goes down. It stops. And then we are here. This is the Dow Jones. This is the resistance line. This is the support line. As you can see, always I do the same. Support line where the stocks have been stopped, and the resistance line where the stocks has stopped going up. Okay, these are virtual lines. We put them just to see clear where the stocks are going. Now, in ETFs, this is the DIA, which is Dow Jones. Okay, this is Dow Jones. Understand that there are some ETFs sectors are better. Some are here are better. You can find others that are here less, or some are less here. So it's better for you not to buy the big indexes. Now, what's the reason? Because they are very, very slow. Instead, if you are going to buy ETFs, you can buy those ETFs that are sectors or industries. Sectors or industries. It means they are doing better than the market. I have explained to you this last time, but I will explain to you right now. Okay? So, excuse me, I was explaining without showing you. So I will do this again. So I said to you, let's say this is the Dow Jones here. It was going up, then it go down, then it go up. This is the Dow Jones. It's here. So this is here. Now the sectors and industries, some of them are here. You see that? Here. It means they are doing better. It means if you buy an ETF that is a sector or industry, you will be making money more than the Dow Jones. Let's say Dow Jones, now you have made 15%. Let's say you have bought DIA, which is Dow Jones ETF. But if you bought other, you can make here 20, you can make here 35, or you can find ETF that you make 50%. All depends on these sectors and industries. But sometimes, if you don't know how to search, you will find that there is another sector or industry that you make only 10%, 5%, and then here you see that you lost 10%, or you lose 20%. Depends on the sector that you are in. So the sectors are not the same. So here, in terms of the performance, they are not the same. Okay? They are not the same. So it's always you should see the performance. So let's go back. Let's go back to our thing. I see here that the chat, it says unable to connect to the chat. So please, guys, write something. I see if the chat is not working. If it is not working, I will be making a refresh of the page, and you might, because you might write something. Because here I see it says unable to connect to chat. Please try again later. So I'm continuing to explain, and then when I want your questions, I want to refresh this, and we will see. Okay, I don't know today what did happen, but I see something wrong with this chat room. So right now, I just before I stop this this explanation, I will just show you ETFs. So to find the ETFs is very easy. You go here on the top left, you put ETFs here, click that. All these that what you see are called ETFs. All these. There are hundreds and hundreds and hundreds. So it's a lot. Okay, it's a lot. And if you want to, we have also Canadian stocks, Canadian ETFs. I don't have other ETFs that are not from other countries. I have only Canadian and American stocks and ETFs. Okay, and then you find the industries and here the sectors and industries, and then when we finish with that, you find ETFs. And if you are searching, you can go online on Google, you can find all these kind of ETFs. If you want to search from here, for example, you want, let's say you want technology ETF. You just write technology ETF. Okay, so write technology is better. So you will find all these. Okay, so beginning from here, you begin to find the First Trust Water Index Fund ETFs. You will find all this kind of ETFs. There are a lot of ETFs. You can go online on Google and you search whatever ETFs you want. There is, I think, ETF.com or something like that. Let's see here. Okay, so let's go to ETF.com. I don't know if it will be working. Yes, I see it working, but I don't. Yes, as you can see here, this is called ETF.com. Okay. And you just search, let's say we put technology, and you see how it works. Okay, so you'll find here information about equity ETFs, technology ETFs here, 181 ETFs with Micron technology, global technology. It means you will find hundreds and thousands of ETFs, and they give you here in ETF University. It means you have education center if you want to study about ETFs, the differences and the other stuff. So it's here you find ETF channels, biotechnology ETFs, bond ETFs, gold ETFs, healthcare ETFs. It means you see whatever healthcare ETFs. Let's see what's going on here. We have so healthcare ETFs invest in the equity of companies from the healthcare industry, like you say biotechnology, healthcare, pharmaceuticals, health. So if you want to see, you will find a lot. Okay, you will find a lot, and it will be a lot of stuff if you want to follow them, because these are just companies. Okay, they are just like companies. They go up, they go down. So we find Labu, for example, 3x shares. When you see 3x shares, it means it is doubled 3 times. That's why here the change is so big. Okay, so be careful. For example, this is called ProShares Ultra Healthcare, ProShares Ultra Nasdaq Biotechnology. It means there are a lot, and I don't want to stay with this because it's too much. It's a lot of too much. Okay, and before we stop this, so I want just to tell you one thing about the goal, what we are doing here, the goal of our swing trading. Now, as you might know, we are doing what we call swing trading. Swing trading, or what we call trend followers, and this is where the money is. Okay, so I will give you an example. The stock market has been going up and then it stops. I always give you the same thing. Why? Because this is how I trade. Okay, and then we have a downtrend, then it stops, and then we have an uptrend. Okay, so this is the way the market moves, but we don't know how long this uptrend, for example here, so this uptrend, and then let's say here, we change the color, we say downtrend. Okay, downtrend, and then here we have uptrend. I can do it with green. Okay, as you can see clearly. Okay, now our goal, when the market is doing good, like an uptrend, the whole market is going up. So what is our job? Our job is just to find, as I told you before, we find the leaders. It means the best stocks that move fast. This is what we want. We don't want slow stocks, because the whole market, most of the stocks are moving. But for us, I want the fastest leaders. It means the fastest stocks in the market. How to find them, how to search for them, how to know. This is my strategies. If you are interested, or some of you have already known what I'm talking about. Okay, sometimes we have a downtrend. You should sell short, you should use options, you should invest ETFs, you should use other stuff. Now, if the market redresses again, we should go and buy the leaders, fastest stocks, and this is for stocks. But if you buy the ETF, most of them are slow compared to stocks. So it is up to you. But it doesn't mean that all the stocks are slow. Some of them, or few of them, are like leaders. They are very fast, because these ETFs, the stocks in them are fast. Sometimes you find ETFs like stocks. Okay? So hope you have understood everything I want to tell right now. So guys, I will refresh the page right now. Maybe I see that the chat is not working, because it says unable to connect. Let me say hi and see if it works. So guys, do you see my letters hi in the chat room? If you see hi, it means that the chat room is good. I will not refresh the page, because here for me it says excellent connection. So NASA and the other guys, Top Series and the other guys, do you see my text? If you see my text, please say hi or say yes. If you don't see, it means I should refresh the page. So guys, I'm waiting for you. If you don't see my text, it means on your end you are not enabled to text. So I will do I waited so long. So I will do a refresh and see. So guys, I do a refresh and I see hi. Guys, do you see my hi text? Oh, okay, you are seeing. Okay guys, I have finished the explanation. So I will go through your what you have written. Please, if you have questions, write them right now. Rahmatullah, he said, hello Kareem, hello Rahmatullah. Dog Lips, hello. NASA, say hello everyone, hello. Pablo said, hi Kareem, thanks again for your patience and helpful advice and tips on how to navigate the market and how it really works. Thank you very much, Pablo. As always. Top Series said, Kareem, maybe 15 minutes video Monday to Friday on the news. So, Top Series, you know, my channel is not about news, because if I say news, it will not help you. Yes, I can explain to you by price. I can explain to you, but I am not going to go online search for why this stock has a gap up or why this has a gap down. This is not what I am, because you can do it yourself. You don't need me. For example, you see a gap up in a stock. You just go to Google, put the ticker name, and you say the news. The news pop out, and you will find explanation. So, but in terms of trading, this will never help you. The price has already gone into the subject, into the price. If yesterday Facebook has a gap up, and today I tell you, oh, Facebook has a gap up. If you have been in Facebook, you have a gap up, yes, it's good for you. But if you are not, what's the deal? There is no deal. It means you just waste your time reading the news. It's like when you watch TV for entertainment. For me here, I am not doing an entertainment. If I am doing an entertainment, you will find millions of subscribers, and I do funny things, and maybe I am an actor or something like that. But I am sorry, I am not that guy. So for me, I'm trying just to teach my strategies to large population, traders and investors, and this is what is my goal from this channel. Ruku, hi. Ruku said, what are you think? Oh, okay. What do you think about coronavirus and its impact on the market? Hey, Ruku, we have been speaking this into this month. I think you have not been here. So coronavirus has done a lot to the market. It means, but we are over this coronavirus. It means the bad things. But now we are in the good things about coronavirus, because we have a lot of gap ups, and in my trading account, we bought stocks, and I give them a list, and they have seen 4 gap ups so far in this 2 weeks or 3 weeks. 4 gap ups that are not earnings. It's related with coronavirus news. So Ruku, I have made a lot of videos about this, and I have my my trading account in silver subscription or golden subscription. If you want to see what we are doing, what I am saying, and to follow me very well, you should just subscribe. Okay? Ruku said, I follow the PR. I have no idea, Ruku. What is this PR? I have no idea. Please put the explanation or what stands for this PR. I don't understand what is it. Ruku said, even second, if good numbers, it will tradable for long time. I don't know what you are talking about. Is it a stock? This PR, is it a stock that you are talking about? Please explain, because I don't understand what you are saying. Oruna Probis, hello, thank you very much for coming. It's a long time you haven't come. Pablo said, golden subscription worth it of a lot of knowledge for a great price you won't get from books or Bloomberg, CNBC. Thank you very much, Pablo, for your testimonial. Thank you very much. Top Series said, besides day trading, swing trading, and long-term investing, what other trading styles do people use? Now, you can use a scalping. Scalping is you buy a lot of shares and you stay few minutes. It's like a day trading, but it is very, very short. So this is the shortest. You can do day trading. It means you day trade stocks or futures or options, or you trade forex, currency pairs, or you trade Bitcoin and cryptocurrencies. So if you are a day trader, you can trade a lot of vehicles like this. Some are very, very dangerous. And then you can do, after day trading, you can do swing trading. You stay many days, many weeks, or many months. You can do what we call position trading. You stay for longer because you know some information about the company, or the company is making some stuff and you have some knowledge about this company, so you buy it and you wait for 1 year, 2 years, 3 years until this thing comes. This is called speculation. Or you can invest for the long run, and this is very known. So this is the most important thing that you can do in the way we trade. Fabian, hello Karim. Sham Bagat, hello Karim. Thank you very much for coming. Top Series said, what broker do you use to execute your order? I use E-Trade, but I didn't choose it. I didn't choose E-Trade. I was with Options House before. That was one of the best broker in America. It was a small, fast execution. They don't charge that much. It was excellent. But E-Trade has bought Options Trader. Options House. You know, big fish eats a small fish. This is Wall Street. Okay? So, I am with E-Trade. Top Series, yes, it was working. NASA, yes. Maybe need another refresh. Yes, I do that. Cannot see the FRDM. Thank you very much for coming. So sorry, the first hour it was doing good, but I don't know what happened with the chat. It just it freezes by itself. I don't know what's the problem. That's better. That's better. That's better. Yes, 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 yes. Raju Ahmed, thank you very much for coming. Can I do day trading with the 3x ETF? Some of them move 10 to 30% up and down in a day. Yes. Ahmed Raju, okay, or Raju Ahmed, you can do, if you are good at day trading, if the index is making $1, you can make $3. Okay, let's say the stock has made 5% today. You are going to make $15 per share instead of 5. You can do 10, which is by X2 or X3. So I think if I have my memory, I can give you um 2x, let's say 3x. Let's say I give you 1. There are a lot, as you can see. let's see the Dow. Okay, as you can see, $1.22 is 5.3, bull 3x shares. So when you say 3, it means it is doubled by 3 according to the thing. You can do in a day. It means you search on Google all the ETFs that are 3x and you choose one, and you understand that if the index, it is doubled into 3 if it is 3x, or doubled into 2 if it is 2x. So Ahmed say, show me SOXL please. Let me see. Direction daily semi-bull 3x, we have $7 and it is 6.36%. You should see semiconductor, how much it gives, and you will find, let's say it does $2.5. So this X, it will do $7.48. So it is just multiplying by 3. Okay? Multiplying by 3. And be careful of this direction like this. You should find stocks. Okay? Let me see Dow Jones 3x ETF. I will just show you right now. If I find yes, I will show you Dow Jones 3x Ultra Pro is SDAO. Let me show it to you. So for example, the SDAO is no, this is short. No, I'm mistaken. Ultra Pro Dow Jones. Okay. Ultra Pro Dow Jones 3x. Let me see. Let me see if I can find. It's called UDAO. Okay. Sorry guys to wait for long. S, it means short. And if you put U, it becomes UDAO. Yes. Okay? So this Ultra Pro Dow Jones, it means it will do 3 times what the Dow Jones has done today. Okay? 3 times. Now there are a lot, and you should follow this. If you are a good trader, you can find the best one which is going very, very fast. Okay, there are some stocks without going to inverse ETFs or 2x or 3x ETFs. You can just find some stocks that move too fast, that has always high percentage. There are a lot of stocks that are doing like this. So if you follow them always, you can make a lot of money if you know how to trade. Now, Top Series said, how is Myrna looking for next few weeks? Now listen, I don't predict. Top Series, I have always told you about how I trade. I don't predict anything. For me, when I buy a stock, I buy it according to my criteria. And I expect, I expect that this stock will go into a trend. Okay? So I will give you an example how I trade. Okay, I will give you just an example to understand how I trade. So I'm not going to tell you how I trade. It means I give you the strategy. But let's say this is the candlestick I bought. Before here, I will not show you what's going on before, but what I show you is the candlestick I bought. Now, what I am expecting from this candlestick. Let's say today here, the stock is $20.25. Just an example. What this is today, what I am expecting when I bought it here. Since I bought it according to my strategies, my goal is that this will trend up. This is my goal. This is why I bought this stock. I expect. Please understand, I told you I expect. I don't predict. I don't predict stocks. I don't know what here. I don't predict, but I expect. I expect, it means something based on my criteria. This is what I base my trading on. This is my criteria. I bought it here because of some criteria. Now what I expect? I expect a trend up like this. Now you ask me for how long? It could be few days. It could be few weeks. It could be few months. Okay? I have live trades that I have done in 5 months. I have traded, and each week I do a video, and they are in training level 20. If you go to my website, you find the trading by video. You find the training level 20, which is my live trades. Each week I make a video when I bought the stock, and each week I tell you what I did for 5 months. I put like 5 trades. One is 5 months, one is 3, one is 2 months, one is 3 months, one is 1 month, and you will see how I trade. This is something that it is proof is how I trade. Now, let's say I put stop loss here. Let's say it is $19. This is my stop loss. Stop loss. It means if the stock doesn't go as I expect and it goes down, it crosses my stop loss, I exit the trade. This is my strategy. I am not going to hold a loser and it's going down. I should exit somewhere, and this is my stop loss. Now, when I say 19 or 20, 25, this doesn't mean that I put it at 19. This is just an example. Because the stocks are different, so where you put stop is different. So this is how I trade. So I expect a trend up. If it doesn't work, I sell. If it continues to work for a few days, then it continues to weeks, then it goes to months, I'm staying. Because why should I I don't have what we call price target. There is no price target in my strategy. I stay until the stock dries up. It means there is no more money coming from this stock. So you understand? So this is top series. This is how, in general, how I trade. I trade through a very simple, effective strategies, and I follow my strategies and my rules, and I should not break the rules. I should do what I preach I do, and that's it. Okay? But if you give me a stock and you say, what do you think about this stock prediction? No, man, I don't predict anything. Any stock that you bring to me, I am not going to tell you anything because I don't know. If you are telling me, is it a time to buy or when is it a time to buy? I will not tell you because you are asking about my strategy when I buy. This is a strategy. This is not free information. Okay? Top series. Don't ask me free lunch. No free lunch in the market. So, thank you, top series, for your question. And Raju Ahmed said, thanks Kareem, I think I will join again for golden subscription. Raju Ahmed, if you have, send me an email. I will check how many training levels, how many golden subscription you have done. You might be entitled for 50% discount. So be careful. You might be entitled for 50% discount. So don't subscribe until you send me an email, and I will check on you on how many training levels or how many subscription months. I accept everything that you stayed, everything that you bought, even if it is an ebook. I will count that. And if I see, I can give you 50% if you reach the amount that I said in the subscription page. Okay? And guys, always in my subscription, I try to help as much as I do. I try to tell you all what's going on in the market. Stocks that I buy, I showed it to you. You can follow me and you buy them. But assume risk, that there is a big risk, because for me, I don't buy stocks that doesn't move or it moves 2% or 1% in a week. I don't buy those. Okay, I buy stocks that are moving so fast, that are leaders, and you should expect big money or you can expect some loss. But it's the strategy, and there is no perfect thing on trading. It doesn't mean that when you lose some trades that you are a loser. It's not. A loser is when you hold a loser. You become a loser. You know, guys, I have been contacted since 2010 about guys. They send it to me when they lose all their money. Someone who has like the one that I feel pity about him, I talked to him in person. He has $500,000. Okay? $500,000. He bought 2 stocks, like for investing. And the second mistake he has done, he doesn't diversify a lot, but he bought 2 stocks, no problem. The other problem, he invests through a bank. So the bank has a lot of fees. He doesn't know for many years, for 10 years, 20 years, 30 years, he is investing from his paycheck. 25% of his paycheck goes to investment. That's why he has a good job, but he invests a lot. This guy is a good investor. But the problem is that he did mistakes and no one tells him that he is doing the same mistakes for 20 or 30 years. For me, although I was teaching him swing trading, okay? Ahmed Raju, I know what you're telling me now, but I can't. Send me an email and I will check for you because I can't deal with this right now. I don't take information from the chat. So send me an email and I will see I will see everything, and we will speak about that. So as I told you, this guy put 25% in his from his money to investment, but through the bank. Understand, the bank, they do a lot of fees he doesn't know. And one of his stocks, after 10 years or 20 years investing, it disappear because his company go bankrupt. He doesn't check. You know, it's another big mistake. Yes, because he has the old ideas. They tell, okay, if you want to make money, buy a stock and forget about it. Hold it for 100 years, and you will become the biggest investor in the world, which is false. You should check your investment at least 3 months once. Through the earnings, you should check. There are ways you should check your stock. And this is very, very important for those who have investment. A lot of people, they send me their investment and I give them a review and I will help them. At least to help them, because this is a psychological problem. When you have a loser, you think that if you sell, you get the loss and you become a big loser. And what if the stock goes up? Okay, I ask him, when did you buy the stock? What price? He say $100. What is now the price? He told me $2. I say, from 100 to $2. You are waited for many years, and then you expect the stock goes from $2 to $100 more? You are so crazy to think about this. And then one time, his stock doesn't disappear from his account. He lost $250,000 in many years because he doesn't know. And then when he called his broker, he told him that the company goes bankrupt. Many years ago, he doesn't know. He doesn't open his account. He doesn't know nothing. This kind of investors, you should never be like him. But he gets the lesson. He goes out from the bank. He chooses a broker. And fortunately, the other stock has doubled. And now he bought other stocks and he followed my strategies. And he is doing way, 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 way better than before. Okay? So Raju Ahmed said, I was with you 7 months in Golden and I bought 3 video levels. Okay, I will see that later. Top Series said, thanks for the honest advice, Kareem. Good night. Okay, thank you very much, guys. We have almost 11 minutes, 10 minutes right now. So, guys, if you have a question about these ETFs or these stocks and you get always a problem, please, if you can't reach me, you can send me always an email and ask me my suggestion or my opinion. Because generally for me, I don't give you an advice. Okay? I am not a financial advisor. I am not. Because you should have a license to do advice. I don't advise people. But I give you my opinion. Now, if you take my opinion, it's just an opinion. You have your own opinion. If you think my opinion is better than yours, you do it. If you think that your opinion is good, you stay. But when you lose more and more money, it means that your opinion is false. If you try to use even virtually, it means you say, okay, Kareem told me this in January. If I do this, I will have money. I will try his strategy virtually. 1 month, 2 months, 3 months, 6 months. And then you see that my strategy works. And you make money virtually. So, you should begin working for real. Okay? So, guys, we are at the end of this session. Please, can you ask questions? Especially FRDM, who came late. And he told me I didn't see the charts. You come late, FRDM. And thank you very much for coming. And all the guys. So guys, I am waiting for you. I think the chat is working right now. I don't see any problem. So if you have a question, please ask me questions. I will be happy to help you. If you don't have questions, I will be showing you some industries. Understand that that the industries sometimes they have different names. It depends which website you use. Depends which company that makes this ETF names. Because sometimes there are differences. For example, my chart is always giving you the ETFs that they have in the chart. Understand that my chart has all the indexes and their industries, and you can check which index is doing good. But for me, as I explained last week, I will show you right now the some, I think, of the ETFs. Let me see ETFs that I put many times ago. Yes, let me see this. Yes, here, guys, if you want to, if you are interested in ETFs about the sector ETFs, it means the broad ETFs, and you see how it is doing. I showed to you this last week. So I will go very, very quick with these ETFs. It means, for example, industrial sector. This is Spider. It means the company that makes this is called Spider. So this is where it is according to the chart, XLI. Now, healthcare, you see the difference? You see healthcare, how good it is compared to industrial? Industrial is not doing that good, but healthcare is doing good. Discretionary, consumer discretionary ETF, materials sector, technology sector, Spider sector, energy, which is doing bad, it's not doing that much. Consumer staples, financial is not doing that good also. Utilities, metals and mining, it's not doing that good because of the a lot of stuff going on there. Healthcare services, regional banking. See, regional banking, it means banking in some regions of United States of America, they are not doing that good. You see the trend is very, very bad. So if you buy a stock from this banking, regional banking, most of them, they will be doing bad. Technology, hardware, home builders, software and services, innovative technology, insurance, not doing that much. But biotechnology in S&P 500, the biotechnology ETF is doing excellent. You see how big is the trend. This ETF, it means the stocks that are here are doing excellent. The bank, you see the difference? You see biotechnology, how it does? Okay. You see how it does? Okay, no. How it does, how good it is? It means it nearly reached the high. See? This is the downtrend, this is the uptrend. It nearly reached the high in the past. It means biotechnology is doing good so far. But in the future, no one knows. Bank is doing bad. Oil and gas, equipment and services, they are doing so bad. Some companies are losing business, and some other companies, they go bankrupt. So oil and gas, equipment and services, they are doing so bad. Internet is doing better. Healthcare equipment doing better. Telecom is doing just near the thing. Capital markets not doing that good. Oil and gas exploration production is not doing that good. The price of oil is bad. Pharmaceuticals is doing medium. Aerospace and defense, they have a problem. As you might know, everything is banned. And no tourists, no transportation. So the airplanes are not working. The people are not working. So they have difficulty, as you can see. Semiconductor, technology, and transportation, and retail. Okay? So it is 1 hour 57, and I don't see anyone who is asking a question. It means you don't have any question. That's good for me. That's good for me because I nearly end this session. So guys, if you are interested to buy ETFs, please find the best ETFs, the leaders, ETFs that are going good, that they move fast if you want to, and don't use ETFs that are doing bad. As I showed you here in this chart, some ETFs are doing bad. Like the energy sector is doing bad. Banks are doing bad. It means if you are buying those, you are not doing good with the market. The market is doing better than you. For example, if you buy Dow Jones, it's better than to buy energy sector. So you see that? It means it is your choice to make money or not to make money. And you say, some people, how can you say that? How can I know which one is which? So, but you need a strategy. You need ways. You need to ask questions to follow strategies. My strategies are very, very simple. It means it's not a big deal. When you understand what I am teaching, you can do it by yourself or your life. You don't have to be in my golden subscription or silver subscription. You just get what you need, and then you begin to work on your own. If you need me, even if you need me, I will answer you and with my strategies because you were my student. But if you ask me a question without being my student and you want strategies, this I cannot tell you because, it's a business wise thing. Okay, so I think we are going to 2 hours. We have just a few seconds left. Thank you very much, guys, who are coming, and thank you for today, because today we have some problem with the live. I don't know what's going on, and hope I will see you next week. Thank you very much.